Hello, this is the market wrap for 7/29/2020. Wednesday, stocks have ended the day higher. The Dow closed up 160.29 at 26,539.57, and the S&P 500 closed 40 points higher at 3,258.44. Mortgage bonds also had a solid day, ending the day higher but off their best levels after testing overhead resistance. The Fed's statement did not have any surprises and was very similar to the previous one. Our good friend and contributor, Peter Bukvar, broke down the Fed's statement thusly. On inflation, they remain sanguine, as they said again, quote, "Weaker demand and significantly lower oil prices are holding down consumer price inflation," unquote. Any commentary on the weak dollar, rising inflation expectations, and the price of gold will have to come in the press conference. The Fed repeated that they will continue to buy assets, aka QE, quote, "at least at the current pace to sustain smooth market functioning, thereby fostering effective transmission of monetary policy to broader financial conditions," unquote. Market dysfunction was something that happened in March and has since been relieved more due to the end of the panic than due to massive Fed purchases, which is now beginning to hinder market functioning in terms of gleaning price discovery and thus accurate market messaging. Economic data. The Mortgage Bankers Association released their mortgage application data for last week, showing that overall application volume fell slightly by 0.8% from the previous week. Purchases were down 2%, but on a year-over-year basis are now 21% higher. Refinances decreased by 0.4% last week, but are still up 121% year over year. Refinances made up 65.1% of all transactions, up from 64.8% last week. Although this report was pretty flat and volumes are at high levels, the media did their best to spin a negative picture. Here's the headline from CNBC's Diana Olick. Quote, "Lower weekly mortgage demand hints at a possible pullback by first-time home buyers." 2%. Purchases were down 2%. That's barely a hint. Anyway, I'm sorry. I'm editorializing while I read this. I should just read it. I will start giving more and more comments as time goes by. That was my opinion about the 2%. Anyway, FHA refinances fell 18%, and purchases also fell greater than 2% overall figure. And because FHA loans require less of a down payment, you could argue that a greater portion of first-time home buyers choose FHA loans. FHA purchases also fell. But let's remember that overall purchase volume was only down 2%. Here's what I was saying. But those getting FHA loans are also likely disproportionately affected by unemployment. And we have been seeing strong first-time home buyer demand in the existing home sales report at 35%, albeit that is not as real-time as this report. We feel that there is still very strong first-time home buyer demand. Interest rates remained unchanged at 3.20%, which is 88 basis points or about 0.7% lower than this time last year. But what a large effect that 0.7 has had. And I'm commenting on my own here. Remember, the MBA rate is for last week and always includes a fraction of points, in this case, 0.37. Pending home sales, which measures signed contracts in existing homes, were up 16.6% in June after rising 44.3% in May. Year over year, sales are up 6.3% after being down 5.1% year over year in the previous report. So that's turned around. Upcoming events. Tomorrow morning, the first read on the second quarter GDP and initial jobless claims will be released. The market is anticipating roughly negative 35% in GDP and 1.4 million new initial claims. Technical picture. Mortgage bonds ended the day almost dead on an overhead resistance of 103.219 after breaking above it earlier in the session. This has been a very tough ceiling that has pushed prices lower this last several times tested. We have to keep in mind, as bonds may be due for a pullback unless they can break through. Had a strong day, moving much higher in their wider range. They are now only 8 basis points away from the formidable 103.219 ceiling. This level has to be watched closely, as the last few times it was tested, mortgage bonds were pushed much lower. We can continue carefully floating into tomorrow, but should we see things turn once resistance is hit, expect to hear from, this is MBS Highway. So basically, the position is to carefully floating at resistance. So kind of on pins and needles here. All right, that's been the market wrap for Wednesday, July 29th, 2020. And with that, I have to thank you for watching and hope to see you again.